during earnings season, when a stock comes in maybe too hot, even a good quarter might not be enough to prevent it from pulling back. Take Shake Shack, iconic burger chain. Last Thursday morning, the company reported a pretty clean top and bottom line beat with its highest restaurant level margins in 6 years, which is what I care about. Yet some people thought there was a fly in the ointment. Shake's same-store sales grew at just 1.8%. Analysts were looking for 2.2%. Give me a break. That's hardly the end of the world. But given that the stock was up 60% from where it was trading when they reported the previous quarter, clearly expectations were high and there wasn't much margin for error there. We have to be careful. But that's why the stock plunged almost 15% on Thursday and fell another 7% on Friday for rebounding more than 3% today. Could this be the pullback we've all been waiting for? Let's check in with Rob Lynch. He's the CEO of Shake Shack to get a better read of the quarter and what's next. Mr. Lynch, welcome back to Bit Buddy.
Thanks, Jim.
Okay, so first, I've always felt that what matters is not the monthly number or the quarterly number, but the cadence. What was the cadence of the quarter each month going into the end?
Yeah, I would tell you Q1 was a tough quarter, and it continued into April where we were down 1% comps. And so we came out of the quarter with positive comps, almost 2%, and we also announced that in July we were up 3.2%. But it's the composition of the comps that really matters. Right. We're moving from a brand that for a long time was dependent upon pricing to drive our growth. Now we're driving traffic growth. It's healthy, sustainable growth.
Yeah, the traffic was up very big in the second versus first. That was really good.
Yeah.
Okay, so Rob, you took over and you had to make some operational changes. You want it to be better. You're not going to just blow out things before everything's right, but I think you have it now. And one of the reasons why I know that is because we check social. And the social for your company is extraordinary. I mean, even, we've got someone who just had your food on Delta. The Shake Shack burger knocked it out of the park. It's a perfect burger choice for an airplane. I hope it continues past 2025. I've never seen anyone say good things about airline food. You do it.
Yeah, it's pretty remarkable. You know, we worked with Delta for almost a year to make sure that we could deliver the quality that our guests expect when they come into our shacks. So that year was well spent. We've got nothing but really positive feedback. We've gone from being in one airport testing earlier this year to now 13 airports. So we're really excited about expanding that and looking at other opportunities where we can bring the Shack brand and bring quality into places maybe you wouldn't expect it.
Well, it sounds like that you can start putting up a lot more stores, and your stores, each one is very lucrative.
Yeah, I mean, we've really improved our restaurant margins over the last few years. We're almost at a 24 margin last quarter, which is the highest we've been in the last 6 years. So when you're delivering great margins, and we've also taken 10% cost out of the build out for our restaurants. So we're delivering great cash on cash returns for our investors. So we're going to continue building. This year we've guided to between 45 and 50. We're going to hit that. Next year we're going to do even more, and the year after that we're going to do more. We've got our pipeline all the way into 2027 at this point.
Oh, that's fabulous. Now, I do think that people should recognize that there is a value proposition here. Some people say it's too expensive. I say, have you been there lately? You've got some deals.
Yeah, you know, we talk about value for the money. Right? It's not. We're never going to be the lowest price point product out there. It just costs more to make.
But we don't want that because it's made to order.
Yeah, every burger, every day, made to order. So we're looking at ways where we can provide more value. Right now, we're running a $1 drink promotion if you download our app, and that's driving not only more traffic, but it's driving app downloads, which are our most valuable customers.
You have not done advertising, and yet you have a lot of word of mouth. What will happen when you start doing all this advertising?
Well, I hope a lot of good things happen. Right. And, you know, we're starting to dip our toe in the water just the last few weeks, Jim, where we've started buying some paid media. We're really happy with the initial results and look forward to learning, optimizing, and continuing to increase that investment and drive that top-line sales growth.
I know you as an innovator. It sounds like you're doing some pretty good innovation that's working.
Yeah, I mean, our Dubai Shake has been a huge hit. Lots of social media buzz, lots of word of mouth buzz. And then we just started advertising it 2 weeks ago, and we're seeing it increase. But we've got a lot more to come. We're really excited about some big ideas we have coming in the fourth quarter. And the whole pipeline for 2026 is already built from a culinary standpoint and a marketing innovation standpoint.
Now, new things just keep popping up. A new place in Atlanta Braves, next to the stadium.
Yeah, we're really excited about that. We're actually opening up our second support center in Atlanta. So it'll complement our New York support center, allow us to bring people from all over the globe to our innovation center there. And right down the street, we built our first Shack bar. Boozy shakes, classic cocktails, full bar, complementing our great food. It's been a huge success.
Do you think you can roll it out? Will it work in other cities?
You know, I actually want to build like 100 of them. I mean,
really?
It's so great, but it's got to have the right real estate.
Right.
It needs to be in the right environment where people are going to come in and not just look for our food, but want to sit down and enjoy a cocktail as well. So we're looking at real estate, but I'd love to build a lot more of them.
I've always felt that you're a coast guy, East Coast, West Coast, East Coast. How's it playing in the great part of the country?
Well, we love all of our guests, Jim. And in fact, as we continue to grow and build more units, a lot of our shacks are showing up in places maybe you wouldn't expect. We just built our first shack and are opening up our first shack in Oklahoma, and we're doing incredibly well. I mean, right now, Dubai Shake we talked about. Guess which state has the highest demand for our Dubai Shake?
Florida?
Texas.
Texas.
And Florida's number 2. I mean,
I would not.
Our brand, we've proven plays well across the country. That's why we increased our, a total addressable market up to 1,500 this year. We really believe that Shake Shack can live in every community.
Now, I know a lot of people feel that we know beef prices have gone up. We know it's a challenge, but you're meeting the challenge. You're not taking your pricing up huge.
No, we've built so much productivity over the last year. Right. Our operating margins have gone from right around 20 up to 24%, almost 24% last quarter. We're right now working in our supply chain to find a lot more productivity. So we're able to mitigate that inflation with all the productivity. I mean, we still have pricing power if we need to, if there's enough inflation. So pricing will always be a part of the model, but we're not dependent upon it like we used to be.
Now, I don't mean to be critical, but my biggest problem is that I will wait in line, and it'll get at the airport, and it'll come too close to my flight, and I feel I have to leave the line.
Yeah.
I know that it's tough to staff some of these places in the airports, but we need more staff or something because the line is a little too long.
Yeah, we're always working with our licensed partners who operate those airport shacks to make sure that they're meeting our standards. We've been able to significantly improve our speed of service in all of our company restaurants. So we've built the process. We've got equipment solutions. We've got labor management solutions to help solve those problems. So we work closely with our licensed partner. The airport's a tough environment for our partners. We're really supportive of them, but I think we got to get better.
All right, that's the way to go. Now, one last thing. When we talk about price, we hardly ever are able to talk about healthy food. I've regarded your food as healthy, so therefore I'm a little less price sensitive. Do others feel the same as I do?
I think most people in New York recognize that Shake Shack came from 11 Madison Square Park, and so their understanding of the quality of the ingredients is easy. We have to help the rest of our guests across the country who may not be as familiar with our origin story recognize that we use the best quality ingredients across the board, from our beef to our fries to the custard we put in our shakes. We don't put ice cream in our shakes.
No, I know you don't.
It's fresh-made custard in the shack every day.
Well, we all have our favorite places. I've got one downtown in Philadelphia, and I've got one in Brooklyn. We all have our favorite shacks.
Yeah.
And that's because you do such a good job.
But they're all my children, Jim, so
I like that.
I can't pick one.
I like that. That's the way
you
keep it that way. That's terrific. That's Rob Lynch, CEO of Shake Shack. I obviously think that this decline in the price is the chance to get in. We haven't had many. We have money's back after the break.
Coming up, Cramer's getting online and scrolling through Reddit's recent earnings report. Don't go AFK. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.